Welcome to Invest. We're talking about investing, finance, and professional development. So current time of 4:43 p.m. on Eastern Time on July 18th on Monday. Hope you have a great Monday so far. Ethereum trading at $1,472, up about 10% so far. Respect over crypto market on this Monday, trading hours ending. It's been ending on a relatively positive notes, right? So congrats to all the ones that have been buying the dips. And on the equity side, I would say is quite comparable, but we have definitely ended on a negative note. We were a lot, higher earlier today because of a lot of positive earnings that came out, driven by the financial sector. Obviously, from Bank of America and Goldman Sachs, both reported exceeding Wall Street expectation guidance, will subsequently drive their stocks to go up. But if you look into the drivers of why, what drove their top line to go up so dramatically, is really due to the fact that with respect to the leverage or debts that they're providing to their corporate companies, and the rising interest rates means that with respect to the commission or the dollars that they take in as part of their revenue streams have increased. So that still doesn't convey a healthy economical market, right? But it's just that they are getting benefit from it because they provide the debt as an intermediary, so they get a larger portions of the cut, relative to normal time, I guess. And the reason I'm saying, I just want to reemphasize why is this a bad thing? Because if a company is truly healthy and they don't really need to borrow debts, they don't need to borrow debts, right? But with respect to the debts that they're borrowing is actually bad debts, not healthy debts that they just use to normalize their operations. So a lot of companies are forced to be borrowing money from these banks, and these banks are basically laughing away, or they are happy to provide debts for these companies at a higher rate. They're not going to stop them from doing it. So it subsequently translates to a higher top line, right? But if you really think about it, yes, it's a positive earning call, positive earning results, but it's for the wrong reason, or bad reason, if you may, right, on the overall macro market. In addition to that, I'm also seeing other parts of news with respect to IBM, which is obviously a computer company. On the second quarter, they have beat both top line and bottom line, so good stuff. And great management team, obviously. And then some other news that I'm also seeing is with respect to the article on China holding of U.S. debts. It seems like the number has fell below $1 trillion for the first time since 2010. So obviously we know that U.S. and China are in this Cold War type of thing, and so with this level of debts, mitigating, I guess $1 trillion still a lot. I guess it's beneficial to the relationship, or at least the cultivation of the relationship that we try to get to. And then with respect to Alphabet, which is Google, seems like they have reported that they're planning on doing a stock split 20 to 10. 20 to 1. Sorry, 20 to 10 makes no sense. And how the Dow Jones would move it, if it joined the index. So that's a good news. Obviously, Google is one of those mega giants, so allowing for more, investors to be buying into this, obviously reputable blue chip company by decreasing the entry price level. But obviously, it's the same price if you look at that in enterprise value perspective. It's just that the shares are basically divided, from 1 share to 20 shares. So just like a smaller portion, but allow for more volume to come in because it becomes more attractive for people to be buying it, right? And then some other news I'm also seeing is with respect to the real estate market. This is another regurgitation news with rising interest rates. Obviously, buyers are more likely to pull back, right? So this is just another regurgitation news on home builder sentiments and statistics. And then some other news that I'm also seeing as the last one. I'm just gonna go right into the technical after this one. Is Goldman Sachs. Seems like in the recent report, it came out literally 3 hours ago. Seems like they are stating that the year-end job cuts is imminent, and despite their positive earnings, they want to re-emphasize the point that the outlook of the economy is still uncertain, that to take precautionary measure, year-end job cuts at the firm can be impossibility, right? So seems like they are hedging, because like this robust debt top line income that they've been generating is not going to last long, right? Because some companies might not actually survive despite borrowing more and more money, because like borrowing money doesn't mean that it's fixing the issue. It's just like gonna maybe dig a hole even bigger for these corporate companies, which it's not something that like we already discussed. So let's just dive into the technical to see what's going on right now. With respect to recording time of 4:50 p.m. on the Eastern time. Ethereum contract $1,475, up 10% so far. Let's just look closely on what's going on right now. You can see that we broke through 1450. So right now we actually got all the way to 1550 earlier today. But you could see that we got canceled out, and the reason we got canceled out is because like right now you can see how extremely overbought we are at the 65 out of 70, and we have apexed, I think anytime soon. We're gonna look for some sort of a reversal coming as we reach a top of the mountain, which we are trying to get to right now. Like this pump has it's basically a combination of things, right? With respect to the Ethereum merge, the digestions of the negative CPI report that we got, supported by obviously some collective positive earnings that we've been getting so far from the banks. But if you really digest the information from the banks on why it's driving it upward, it's not because the economy is doing well. It's because like a lot of corporate companies are they have to take the hesitating measure of borrowing money from the banks at a higher rate. So that's why the banks are able to generate higher return or higher income for themselves. So that's not a healthy problem. Again, this is like a very unhealthy pump. I'm not saying it's artificial, but it's just like it's a misrepresentation of how it should be measured psychologically. Let's just put it that way. So with respect to Bitcoin, it's up 4%. We're like 3.63. You can see that we clearly got canceled as we got to 22,500 earlier, and we gave $1,000 away back into the next level of support, which is 21,500. We're at the 52 out of 70 right now. You could see that we're clearly having some problem getting above this level. So ideally, buying, at this level would not be the most logical because of the fact that we are going to be forming Apex anytime soon. And are we gonna foresee more positive corporate earnings coming out? I don't know, but do you want to stretch your luck as the FOMC meeting approaches? Knowing the fact that the CPI was already negative, so the likelihood of Jerome Powell raising the rates can be a possibility. And also with respect to on Wednesday, I believe one of the vice chairmen from the Feds is also speaking. So we might hear some foreshadow negativity onto stitching a story on what we're going to be expecting as we are marching towards the FOMC meeting hosted by Jerome Powell. And then for Classic and all the other ones are trading on similar fashion, right? We're getting pump very majorly from Ethereum Classic is because of the Ethereum merge that's coming out September 19th. But again, it's despite you could say it's confirmatory or non-confirmatory, it's getting picked up on the media front. So the massive market awareness drive this market to, this price to go up, right? And then across all the other coins is basically dragged up by the key coins. MACTAC is driven by some sort of a specific affectation. So let me just take a look at this. Why is it up like so massively? You could see that with 77 out of 70. So crazy overbought. We even almost hit $1 at one point. That's bananas. And I think it's because of the golden cross that was formed on the weekly perspective. Let's see the monthly. Monthly is still looking for some sort of a rebound. You could see that we are looking for a plateau. But you can see that clearly we got canceled out as we reach $1, which makes sense at the monumental level. And I think with respect to the current setup right now, at 77 out of 70, that's very overbought. So I don't suggest buying in, but shorting this can be a possibility, if that's something that you could risk, or tolerate that risk. Okay. And then the overall market obviously closed on a relatively neutral note because of we were up throughout the day because of positive corporate companies earnings, but with respect to the golden hour, which is like 3 p.m. hits, it dips down, right? So appreciate you for joining me again on the second video, and again, you saw my recent posting on the survey. Yeah, feel free to reach out to me or connect to me on LinkedIn, which is I'm quite active on it. And appreciate you, and have a good day, and take care. Bye.